Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. So we've got three important indices that have rallied up to their 200-day moving averages and failed at this point. The S&P, the Russell 2000, and the semis, the SMHs, as a group, the ETF. Some of them have broke out above their 200-day, but the SMH ETF is failing as of right now at its 200-day. Semis being the most cyclical component of our equity market, in my opinion, has had a huge move. I'm not sure if there's much left in the tank to carry it a lot higher. Inventories are high, demand is slowing, pricing power is waning. We'll see. They are going to reflect and move first, which they're trying to do. I think it might be a little early is the thing. So right now, market's looking flat. Commodities up with the exception of the ag complex. Rumor out of China that they may talk about the latest version of COVID being similar to the flu, declare victory, having saved 6 million lives, and move away from zero COVID. That's the rumor. Hong Kong was up 5% overnight, mainland China up significantly as well. As we've talked about, we were playing China through Hong Kong, the EWH. We did trim it a little bit a few days ago after just having a great move. We also are in the small caps over there. The ECNS is the small cap China ETF. The thought there is you have the most accommodative central bank on the planet right now. You've got potentially a population moving away from lockdown, and small caps would potentially do quite well in that environment. So market's at an interesting spot here. We talked about these broad indices that have rallied up to its 200-day and failed. You got Powell giving a speech tomorrow. I think that's significant, and he almost has to talk tough given how much the dollar has pulled back. If he takes an overly dovish tone, he risks further fall of the dollar, which is getting close to its 200-day moving average. If that thing starts to look like it's going to spiral lower, that's going to spark up moves in commodities and stocks, risk on type stuff. Both those are inflationary. I don't think that's what he wants, and he's smart enough to know these things. There doesn't seem to be enough blood on the streets of the U.S. economy to hint at a pivot at the risk of not totally squelching inflation. So I think that continues to be his number one move. He always is quoting from the past and the lessons learned where they didn't stay tight enough long enough initially and had to really go in there and crush the economy. He wants to avoid that, so perhaps tomorrow is a bit of tough talk. We will see. The VIX yesterday had a bit of a hit at support level 2 days ago, bounced yesterday with a declining market, had a pretty good move. May not be the worst idea to buy a little protection at this point. At the worst case scenario, if we do start to pull back quite a bit, it's gonna help you out. If we start to break above the 200-day and things look great, you just get rid of it. I think it's that simple. I think we're at a pretty important spot right here for the next, call it through year end. I think this is a pretty telling place in the market. I think the next few days will be very, very important, in my opinion. Have an awesome Tuesday. Go USA versus Iran.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.